Good afternoon, this is Todd Colvin coming to you from the floor of the CME Group. We are looking at metals and gold prices slightly higher as we hit the midpoint of the September range, right around 1205. Market's seen a range of around 1193 to 1218, about a $25 range, which is very low, very tight. Year to date, we average about $57 a month in range, and right now we're not even halfway there. So obviously a big event coming up later this week which could change all that, but right now the market sense is that it's coiling, waiting for either a nod to go back into the selling trend which we saw since April, or is it going to be an indicator for something different? And I think right now the market technically is just waiting for that breakout move. We need to see a move obviously north towards 1218. I think in order to call it a breakout down below, I think once you break significantly below 1200 again, I think you're going to start to see sellers pile on. The dollar didn't really have much effect today, traded very much sideways. Yeah, we saw a bid out of the pound and the euro, and we heard ECB President Draghi speaking about inflation and outlooks and whatnot, but it really didn't have any ripple effects here. So the dollar pretty much a non-event. Lastly, let's look at gold and FOMC. FOMC coming out with their announcement on Wednesday, likely to raise rates 25 basis points, which has been priced for quite some time. Now, a gold trade will typically be the opposite. When interest rates go up, it's usually negative to gold. Obviously, interest-bearing commodities or interest-bearing instruments will fare better than zero when rates are going up. So that's going to be kind of the tail of the tape. If we see gold prices start to rally after the FOMC meeting, even after a rate hike, it could suggest that the market is pricing in possibly nearing the end of the rate hike cycle. Likewise, if we see gold sell off strongly, I don't know if it necessarily means that there's going to be extension of the rate hike cycle into 2019, but it certainly means that the Fed is going to remain very hawkish. So I think that if we see the gold market rally here, it's really a signal that 2019, while still unclear and uncertain, could be the writing on the wall, could be that they're going to have to slow down these rate hikes, either let the economy catch up, see what happens with trade, see what happens internationally, whatnot. But ultimately, I think that if gold rallies, it'll be a big signal and a big indicator to the market that gold does not fear more rate hikes to come in 2019, at least not at the pace we saw in 2018. This is Todd Colvin coming to you from the floor of the CME Group.